Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 14th of October, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I wish I could record that and just have it play instead of saying it every morning, but unfortunately, I have to say it every morning. Um, the overall market stance right now is bullish with the Euro stocks and the DAX leading up 1.9%, 1.7% respectively, followed by U.S. equities and crude oil. Crude oil is trading at 50.72, up about 54 basis points. The weakest product I'm watching is the Japanese yen down 0.67, 67 basis points. The U.S. Treasury bond and the British pound. It looks like the market's allocating to risk this morning. The overall news flow is fairly light. Inflation picked up a little bit in China. Consumer prices rose to 1.9% year over year. And other than that, there's really not much more there. Samsung's taking a big hit on the recall and cancellation of the Samsung Note 7. But in any case, you can look that stuff up. I shouldn't get into it. As far as what we're expecting today, we have a couple of key numbers. The PPI came out earlier. Um, PPI came out at about a half hour ago, and then we're still looking for business inventories at 10 Eastern, expecting 0.1%, and looking for University of Michigan confidence. This is the prelim number. It is a market mover usually, expecting 91.9 for the month of October, 91.9 also at 10 o'clock Eastern, 9 Central. We do not have any Fed speakers left. Well, actually, we do. No, we do. I'll take that back. At 9:30 Eastern, right at the cash open, we have BOE speaker Carney, and then at 1:30 Eastern, we have Fed speaker Yellen. The Fed chair speaks at a Boston Fed conference, so we'll be looking out for the comments and reaction to that. I'm sure the market will be listening again. 1:30 Eastern U.S. time. Fed speaker Yellen. That's 6:30 London time. Just pay attention to that. So the key times today are 9 o'clock Eastern and 1:30 Eastern for potentially market moving information. As far as what we looked at yesterday, overall, the primary idea, and I covered this a couple days ago. So we had our sell-off on the 12th, um, actually on the 11th, and I went over this. We broke. This is the trader bite from, if you look at the date here, from the 12th, 2 days ago. And I basically talked a fair amount about how when we have dropped in the past and tested lower prices, the market has generally pushed back up. It extended, but it pushed back up and took a lot of that back. And I cautioned against folks getting too bearish. There's a lot of heavy bear kind of talk out there. And then for that day, the primary idea was to chop around in the middle, test up, but overall to break that low, the prior day's low, and move down into the 2115. The normal course of this type of a move is to pull back, push, extend the move, and then look for a base, and then move back up and potentially take the selling back, is what we've done um, over the last year or so. And that was 2 days ago. And what I want to show you is what we expected yesterday. So we had our drop, and on the 12th, we didn't get the continuation move. We got the pullback, but we didn't get the continuation move down to 2115, right? The market basically gapped down yesterday, was gapping down, but on the 12th, we actually didn't get the extension. So yesterday, we were gapping down, and the extension actually happened overnight. So the theme yesterday was an open auction, and then overall, to push back into the range, and a key target for the day was 2132.50. Again, this was yesterday's videos. You can see the date here. That was the primary hypothesis. The secondary hypothesis was for the market to push back up into the range, get back towards the prior day's range, the consolidation day after the sell-off day, and then find its sellers and continue lower. That was the secondary hypothesis. What actually happened yesterday is a little bit of both. It was very, very difficult to determine whether Hypo 2 was in charge, was in play or not, but we did get an open auction, an open auction out of range on the open, so it gave us a little bit of an idea of where the strength or weakness is. So we had our open auction right here, and then we broke the opening swing to the downside. And then it immediately fell through the key figure, which was right here, 2110.50 is the low of September. And what that does is it stops the one-time framing up we've had month to month. Um, and it actually stopped last month in September. And what it did now is it initiated one-time framing, potentially one-time framing lower. If we keep a lower high in October, it could signal a trend change, a high time frame trend change to the downside into the end of the year, which could set us up for the Christmas rally as we see that seasonality with fair regularity year after year. So yesterday it broke lower. It broke that 2110.50 figure, and it found a pretty decent base down at 2107.75. And here we go. We get this big rotation up. We get this decent rotation up 7.75 points, which is higher than 2 standard deviations for the harmonic rotation on the ES. And then it does this push down, extension, pullback, corrective, starts a corrective move higher, and then here's the impulse, and then the expectation is to pull back and then continue higher, which is exactly what happened. So yesterday's auction was pretty decent. Lots of wide rotations, and pretty good follow through. The IB broke to the upside, none to the downside. It was a normal variation day yesterday, but you could see that the rotations are very wide, right? So we have really wider than normal rotations. Compare that to the day before, which was just very poor, poor trading. It's like I said, I think I said this in the S5 chat room, that it was basically the same kind of garbage that we had July, August, just tough pickings on this day up here. So overall, yesterday was pretty decent trading, and we ended up pushing towards our key target. So recall, our target was 2132.75. Here's your high, 3132 and a quarter. Just missed it by a tick. Very very orderly auction as far as I'm concerned. And what this sets us up for is it sets up a nice cutoff point, a key LVN that we can watch for an over underline at about 2120 half, and it closed fairly strong with the point of control on the upper end of the range outside of the initial balance, which is right here. These yellow lines are the initial balance or the first hour's high or low. And what this sets us up for is a continuation higher, which is what we saw overnight. So overall, I'm fairly happy with the way the market traded yesterday. I know that's not the case for shorts. I'm not speaking down the short side. I'm just saying that the overall auction. It's nice to see when the overall auction follows the normal pattern, because I can then take advantage of that as opposed to just fluttering around. Here's what we've done. We've opened. We've chopped around in the Asian session. The European session opened right here and then immediately started to go into an impulsive move up. And what we've left behind, which we should note right here, is look at where yesterday's high is again, 2132 and a quarter, just below the MC point of control and the prior day's point of control, the prior session's point of control. And what we've done is we've left a low volume node overnight right there, right there on the spot. And so what this has done is it has had an impulsive move up. Where did it pull back to? It pulled back to 2132 and is now pushing against the high, and it's expected to continue its move higher. And so what this does is it creates a secondary line to watch out for at 2132 again, which is a key multiple key figure MC point of control from a couple of days ago. It's a naked point of control. It's yesterday's high, and it's the overnight key LVN for the pullback. It was tested, and the test held. So this is going to be the first key line, and then 2120. 50 is going to be the secondary key line for sellers to push through in order to stimulate more selling and for buyers to defend in order to hold off more selling. So that's how things are shaping up. Fairly well organized market. Real quick, just to keep the big picture in mind, here's what we've done. Okay, this is September's low right here. That's September's low. We put this peak high in August. September started with a lower high, lower low, and what we've done so far by pushing yesterday's low is we've continued the September high with a low in October, and so far we have a lower high. And of course, we've got 2 weeks left in October, so there's plenty of time here to do whatever. But it's really key to watch how this is setting up and how the monthly is rotating down. You got to keep that in mind. The overall expectation was for the October trade to push through to the 21.72.75 area and then attempt to attack this high the way the market was configured until about Tuesday. That's how things were shaping up, and this idea is changing. So we are in neutral gear right now when it comes to the market, and we're looking for what the next key test is going to be. It's still in a fairly wide range. The expectation for today, and I'm running out of time here. I've only got 2 minutes. The expectation for today, we are opening out of range. The expectation is for an open auction. I'm looking for the market to attempt to pull back, but I'm looking for a push to 71.44 this morning, which only gives us 8 points initially, a pullback, and then I'm looking for continuation through Tuesday's range. So I expect Tuesday's range to be tested somewhat. Let's zoom that in a little bit. So this morning, I'm looking for an open auction. I'm looking for it to pull back towards that 32 area, potentially poke through, and then push to 2144.50. And then the ultimate target would be 2152.75. That would be hypothesis number one. So initially, looking for a sell. You've noticed this theme, right? We open in an auction. We look for a pullback. Uh, just like a bow and arrow, you got to pull the arrow back before it can be launched forward. And this is somewhat of a similar idea that generally the market auctions lower to seek buyers out. And so if there is a continued buying push, then we expect it to pull back before it continues higher. That's just the normal course of the auction. The secondary hypothesis is to push through on the overnight high, pull back on the overnight high, and then also continue up to our key target without any pullback at all, leaving a gap zone below. The tertiary hypothesis is to push up, squeeze through that overnight high, complete the move overnight, then find its sellers who showed up on Tuesday, and then start to breach back into the 3250 and push back into the range, targeting the 2126.50 on the downside. So that would give us a resting day after yesterday's push higher. Okay, so that's how things are shaping up. Those three ideas, the primary hypothesis has a better probability, but overall, hypo 2 and 3 have a 50-50 coin toss in between them. Uh, the expectation is that the market is likely to pull back as prices go higher. Sellers who did not participate on Tuesday are likely to be activated today. So I'm looking for that push lower, but there's a fair amount of support here that buyers can buy against to take advantage, at least in the intermediate time frame. That's how things are shaping up. Uh, Again, hopefully you're still getting a lot out of these trader bites and are ultimately coming up with your own ideas and plan and are pushing forward with creating something that's uniquely yours that you feel confident in and that you can execute um, on a consistent basis. Good luck, and I'll catch you tomorrow. And by the way, the video for yesterday's order flow webinar will be sent out to everybody who registered on the for that webinar. It'll be sent out today. It's being prepared. If you did not register and still want the video, click on the YouTube logo in this video or go into the description, and at the bottom of the description there's a link to be added to the list of people who are interested in getting that information, and then go ahead and just provide your email and it'll be sent to you. Please don't forget to hit like as you walk out. Appreciate you doing that. Thanks for listening. Take care.